So today we're going to be doing a dividend investing portfolio update. Let's go ahead and jump right into the portfolio to not waste any time. So here we are on M1 Finance, which is the investing platform I personally love to use. If you're interested in checking them out, I will have a link down below. So right now, my current value is at $4,973.12. It looks like as of right now, we are up $111 for the day, which is fantastic. The week, we are up $167.07. The month, $319. And then the quarter, $280. And that's including all the craziness that started happening at the end of February and all of March. And then for the year, we are up $386.40, which is 34.5%. Now, this is money weighted return, so it's a little bit different than just the unrealized gains. This is essentially meaning if I sold a company for a profit and kept that money in the overall brokerage account and used it for something else, that is still showing up here, which I love. Because I can go into my holdings, and I can see here for unrealized gains, I'm up $194.78, which is 4% of my portfolio. But that for me personally is just not a true representation because, yeah, I sold some stock for some really good profit, but that wouldn't showcase in the unrealized gains because, of course, I did realize them. But that is beyond just that. Now, this is, of course, yeah, my main portfolio that I focus in on for dividends. So we're going to take a look here. I actually have things split up into different sectors. So if you're not too familiar, M1 Finance lets you kind of split things up into different areas. I have a tech sector, financial sector. I have Vanguard, which is a ETF right over here with VOO. I keep that by itself since it essentially is a culmination of a bunch of different stocks. Then I have my consumer products, my retail, real estate, industries, and then health as well too. So we'll go into each one here individually, see the different companies we have. But one thing I want to show you too, if I go into my research, click on my pies, I can go ahead and click on my overall portfolio and show you kind of some information here. So right now I have 31 holdings, including the Vanguard ETF. My dividend yield is 3.55%. Technically my expense ratio should be 0.03% because of Vanguard VOO. Yeah, see 0.03%. So I don't know why it's not showing up, but that expense should be there. And then you can see over here, overall performance in the last 5 years, I would be up 52.25% based on all of this right over here. So I'm pretty happy with how my setup is all together right over here. So let's go ahead and jump into each sector here, and you guys can take a look and see what I'm invested in and what I have as far as overall percentage for each stock. Now, one thing I do want to mention, of course, before we get into this is, I'm not your advisor, so always keep that in mind. This is me just sharing my journey and what I have, and my portfolio can change on a whim, honestly. Like, I sometimes buy and sell, so I don't know exactly where I'm going to be, in a couple of weeks from now. It just all depends on how the market's moving. So don't be surprised if in a couple months this is not exactly the same. So here in our tech, this is our biggest value at $1,018. We have AT&T, Microsoft, Verizon, Apple, and then Texas Instruments. So you can see here that AT&T has 317 of that 1,000. They are at 31% of my portfolio, so they're kind of on par with where they should be. Microsoft is at 20% of this portfolio, Verizon 19, Apple 18, and then Texas Instrument is at 12%. So if you're not too familiar with M1 Finance, that means that when I make a deposit into my portfolio, based off of where my percentages are, when money comes into this sector, it will be distributed evenly across the board based off of where my actual target is and where my actual is and versus where my target is altogether. So for me, that is a great way to kind of go about investing if you are somebody who's maybe not too meticulous on every little detail. This is essentially kind of like a set and forget model. For the most part, I still like to pay attention to everything, but this gives me a much better control of having certain stocks in my portfolio have more value than others without having to do all the little work on the back end. So I really like this kind of setup for me, and that's why I love M1 Finance. So if we go into these stocks individually, like AT&T, we're going to see here that I actually have about 10 shares of AT&T because M1 Finance lets you do fractional shares, which is my favorite thing in the world. Their average share price that I have with them is $30.71, which is a little bit lower than the market price because the market did go up today. So that is really, really nice for me. If we go into Microsoft, we can see here, Microsoft has 1.1 shares and average share price is $156.89. So I was buying into them, but I slowed down a little bit and I was buying into some other stocks. But that's also the beauty of dollar cost averaging, is buying into small increments. Actually, it doesn't change the dollar average price, average share price too extensively, because I still have been buying even with it going up, just not as much as I normally would. So my financial sector over here is doing really well as well. We are up for all time 38.42%. Again, money weighted return here. So my overall value here is 775, and you can see here I have Aflac right now at 28% of my portfolio. Discover Financials up at 26. This one I dollar cost averaged pretty hard on, just because the fact that they dropped crazy amounts for when the market dropped, and I just saw a lot of value in them. Paid out a great dividend as well too. So as long as they stick with the dividends and their stock goes up, which it has been since I've been dollar cost averaging, this will be really, really good. I also have Ally over here at 16%. We got MasterCard at 15% of this portfolio, and then we got Visa at 15% of the portfolio. Now, MasterCard and Visa currently aren't where their target is, so if I do any deposits, a good chunk of it is going to go into those two stocks themselves. Let's go to the next sector here. So the next one technically is Vanguard VOO. So this one right over here is 15% of my portfolio, and I have 2.65 shares of this stock. Now, this is one of my favorite ETFs personally. I always tell people when they ask me, hey, how do I get started, or what do I get started with? I can't tell people what to do, of course, when it comes to that, but I always tell people this is what I got started with, and it's my favorite. It's gone down significantly since I started this portfolio. I started it at 90% of my overall portfolio, but as I got more confident and comfortable with investing, it's gone down. I don't think I'll wipe it away from the portfolio entirely, but I never know, because that was, 90%, now it's 15%. So next up here, we have the consumer products. So in consumer products, total value is $636.41. And we can see here we have Coca-Cola at 20%, Hasbro 20%, Pepsi, Procter & Gamble, and Kraft Heinz. All of these are at 20%. I didn't really want one weighted more than the others for the most part for now. I did want all of them to get a healthy amount with every deposit. So that's kind of why I kept it there. This one is actually performing quite a bit less than all the other sectors, so there's still hopefully some good value here if I want to keep investing more into this. Let's go ahead and check. Next is going to be retail. So retail has $575 into this, and we have a couple companies here. We have Ross at 30%, and then we have Home Depot at 25% of this portfolio, Target at 21%, Costco at 12%, and then we have Starbucks at 12% as well. So this portfolio is doing, it shows really well, but part of that reason was because I believe I had some stocks in here that I sold for a really good profit. Actually, I did. You can see it right over here. So I sold it, and then I actually kept the money off for a moment, and then I rebought back into it. So that's why I love the money weighted returns, because if not, I would not know that this overall portfolio, or pie I should say, had some really good gains because of some of the stocks that I ended up selling out of. I don't try to do it often where I'm selling out of the companies I'm in, but sometimes those stocks just skyrocket to the point where it almost doesn't make any sense why they did, so I try to capitalize on the gains as quickly as possible. Next up is going to be our real estate. This real estate and all, so real estate is actually the only sector that is currently down for the money weighted return here. And a lot of this has to do with what most people probably have in their portfolio, and that's with NRZ. So I'm still down pretty heavy on NRZ, but I've actually dollar cost averaged on them. So that helps a lot, and hopefully it will come back, which I believe it will, because if not, I would have sold it a lot earlier. But going back to this, I have $552 in this overall account. And then we have Realty Income at 62%. They are my monthly paying dividend. Right now, I jumped them up quite a bit because with their current stock price, their dividend yield is like 5-6%. So it's really high up there. And I want to kind of throw my money in there now before it goes back up in value and the dividend yield goes down. Then we have NRZ, and then we have DLR, which is Digital Realty Trust. I really, really like this one. And this one is at 15% of the portfolio. And because I forgot to mention, NRZ is at 23% of the portfolio. But overall, really good setup there for me. I like that. Not having too many REITs in the portfolio is always good too, because I think at one point I had 5 and it was too much for me. Next up, we got our industries. Industries, we have $395.57 in here. Also not super stellar when it comes to overall returns just yet. I think there's still some great opportunity though from where the market is. So we have 3M in here, which is 35% of this portfolio. We have ADP, which is 25% of the portfolio. We have CMI, which is 20%. And then we have LMT, at 20% of this portfolio. So nothing too crazy going on here. Kind of just, clear enough to the point. I got 4 different companies. At one point I had like 9 in there, and then I just started cleaning off some of those companies because I found out that having too many stocks from so many different companies was making it really hard to focus in and really, pay attention to these companies that I currently have. All right, and then this next sector here is going to be with health. Health is the smallest portion of my portfolio, but I am increasing it ever so slowly. So here I have $290.31. And you can see here, it's actually up almost 22%. And that's obviously with everything that was going on in the world. A lot of the health stuff seemed to have just jumped up because right before that, they were kind of just coasting by. So we can see here, Johnson & Johnson has 45% of this portfolio. AbbVie has 30%, and then Pfizer has 25% of this portfolio. So, pretty good diversification between the different companies I have and then the percentages that are in there. And then if we see here at the front with all the slices together, you can see that right here, the tech overall is 21% of the portfolio. Financials is 15%. We talked about Vanguard already being at 15%. My consumer products is at 13%, retail is at 12%, real estate is 10%. I think that's a great number to be at percentage-wise for a portfolio. Industries is 8%, which I do plan on bumping this up and then maybe moving down a little bit on the retail stocks. And then health as well is at 6%, and I do want to increase this an extra percent or two, and I think I'll be taking it from either financials or tech a little bit from there. But that's going to be the way I'll have to do it when it comes to readjusting all of my stuff. Now, if you want to keep on learning more about dividends and investing through my journey, check out my next video right over here. My name is Dennis, and I will see you in that next video.